Every business that handles accounting needs to record its transactions somewhere. Transaction records are important because they are proof of how your money is being exchanged, how regularly, and with whom. Also, how do you record rare transactions like depreciation, bad debt, the sale of assets, etc.? This is where importance of journals and ledgers come. One. Books of original entry. The real accounting system does not record business transactions directly in the books of accounts. The books in which transactions are recorded for the first time is called books of original entry or journal. Subsequent to the completion of debits and credits for each transaction, after correct analysis, are entered in the journal are transferred to the individual accounts. The process of recording business transactions in the journal is called journalizing. Once the journalizing process is completed, the specific record in the business organization is called journal entry. Each journal entry provides complete and useful description of the event's effect on the enterprise. After completion of the journalizing, the debit item as well as the credit item get transferred to the individual accounts. The process of transferring journal entries to respective individual account is called posting. The process of preparing journal entry is called the book of original entry, and the respective ledger is the principal book of entry. Based on the number and commonality of maximum transactions, the journal is subdivided into books of original entry as follows: 1. Journal proper. 2. Cash book. 3. Other day books. A. Purchase book, purchase journal. B. Sales book, sales journal. C. Purchase return book, return outward book. D. Sales return book, return inward book. E. Bills receivable book, bills receivable journal. F. Bills payable book, bills payable journal. Two. Journal. Journal is the basic book of original entry. In a journal, the business transactions are recorded in chronological order as and when they occur. Each transaction is separately recorded after defining which accounts to be debited and credited. A typical format of journal is shown below. The first column in the journal is date, which is used to record the transaction date, and the same should be chronological order. In the particulars column, on the first line the account title to be debited is to be written, followed by the short form DR is written at the end. In the second line, the account title to be credited is to be written, prefixed by the short term to. Just below the debit and credit account titles, a brief description of the transaction named as narration is to be written. The column indicated LF refers to ledger folio, records the page number of ledger where relevant account appears and will be filled at the time of posting journal entries to respective ledgers. The debit amount column records the amount against the debit titled account, and credit amount column is for the credit titled account. The journal entry may be simple or compound. When two accounts are involved as debit and credit to record a transaction is called simple entry. The examples of simple entry are as below. A business involved in the following transactions on 31st March 2025. A. Paid salary to staffs by cash 50,000 rupees. B. Paid wages by cash 20,000 rupees. C. Paid electricity charges by cash 1,000 rupees. The first entry on 31st March 2025 is salary account debtor to cash account. The narration is being cash paid as salary and the amount is 50,000. The second entry on 31st March 2025 is wages account debtor to cash account. The narration is being cash paid as wages and the amount is 20,000. The third entry on 31st March 2025 is electricity charges account debtor to cash account. The narration is being cash paid as electricity charges and the amount is 10,000. Explanation: in the above three journal entries, there is one debit and equal and opposite credit. Also, all the debit items are different expenses account and credits are one similar item, cash with different amounts. These are typical simple entries. In case of compound journal entry, there may be single or multiple debits or credits against which single or multiple credits or debits. For illustration purpose, let us take the above example itself. The below will be the journal entry for the three transactions. Here journal entry on 31st March 2025 is salary account debtor rupees 50,000, wages account debtor rupees 20,000, electricity charges debtor rupees 10,000 to cash account rupees 80,000 with the narration being the salary, wages and electricity charges paid by cash. Explanation: in the above compound entry, there is multiple debit items of various expenses with different amounts, a single credit with consolidated amount and one narration for all transactions. 3. The ledger. The ledger is the principal book of accounting system. Ledger contains various accounts where transactions relating to that account are recorded. A ledger is a collection of all debited and credited accounts. A ledger is in the form of a registers, cards, or sheets. In the ledger, each account is opened on separate page or card. A ledger is highly useful and very important in a business organization. The net result of all transactions with respect to a particular account on a specific date can be ascertained only from the ledger, which is not possible from the journal as the transactions are recorded on chronological order. A format of the ledger account is as below. The column descriptions are as below. A. The first title must be the name of business organization for which ledger maintains. B. The second title must be the title of account, which should end with account. C. The third line must be an indication DR. On the left-hand side indicate debit side and also CR. On the right-hand side refer credit side of the specific ledger account. The columns of the right-hand side will exactly repeat on the credit side. D. Date. The transactions are to be posted in chronological order on both sides. E. Particulars. This column is very important and strictly follow the posting rules. In a journal entry, if the title account is debit, corresponding credit account is to be posted, prefixed by to. Similarly, if the title account is credit in a journal entry, the debit account is to be posted, prefixed by. F. Journal folio, JF. This column is used to record the page number of the journal from where the transactions are recorded. G. Amount. The amount column refers to the numerical figure as per the journal. Difference between journal and ledger. Both journal and ledger are the most important books under double entry mechanism of accounting and crucial for the accounting system. The following are difference between journal and ledger. A. The journal is the book of original entry, first entry, and the ledger is the book of secondary entry. B. The journal is the book for chronological record, and the ledger is the book for analytical record. C. The process of recording transactions in a journal is called journalizing, and recording the same in the ledger is termed as posting. D. The journal is book of source entry and gets legal evidence than ledger. E. Business transaction is the basis of classification of data within the journal, and account is the basis of classification of data within the ledger. 4. Posting from journal to ledger. Posting the process of transferring the entries from journal to the ledger. Hence, posting means grouping of all the transactions in respect of a particular account at one place for meaningful conclusion and for further accounting process. Process of posting is described below. The important point to understand while posting a journal entry is, if the ledger account opened is for the debit item in the journal entry, use only the debit side of the ledger account. With regard to credit item, this will be elaborated after understanding the posting of debit item. A. Open the ledger account to use the debit item in the journal entry. B. Enter the transaction date on the debit side date column. C. In the particulars column post the credit item of the journal entry through which it has been debited, prefixed by to. D. In journal folio column, JF, enter to page number from which journal entry took for posting. E. In the amount column, enter the amount of the transaction against the credit item, which you have entered in the particulars column. Similarly, if the ledger account opened for the credit item in the journal entry, use only the credit side of ledger account. A. Open the ledger account for the credit item in the journal entry. B. Enter the transaction date on the credit side date column. C. In the particulars column post the debit item of the journal entry through which date has been credited, prefixed by. D. In the journal folio column, JF, enter to page number from which journal entry took for posting. E. In the amount column, enter the amount of the transaction against the debit item. By an illustration, it will make the posting procedure clearer. Illustration: below are the transactions in the books of Mr. Anand for the month of July 2025. 1st July. Cash invested as capital 50,000 rupees. 10th July. Cash deposited into bank account 40,000 rupees. 31st July. Salary paid by cash 10,000 rupees. Here, the journal entries are: 1. On 1st July, cash account debtor to capital account with the narration being the capital invested and amount rupees 50,000. 2. On 10th July the journal entry is bank account debtor to cash account with narration being cash deposited into bank account and the amount rupees 40,000. Three. On 31st July the journal entry is salary account debtor to cash account with narration being the payment of salary and the amount rupees 10,000. List of ledger accounts to be opened. 1. Cash account. 2. Capital account. 3. Bank account. 4. Salary account. First, we will open the ledger cash account and review the details. Explanation: all the three journal entries consist of cash account as one element with corresponding credit and debits are different accounts. A. In the entry dated 1st July 2025, cash account appeared as debit item, hence use the debit side to post the credit item, that is, capital account. The amount is 50,000 rupees, common for both debit and credit. B. For the entry dated 10th July 2025, cash account appears as credit item, hence use the credit side to post the debit item, that is bank account with the amount as 40,000 rupees. C. For the entry dated 31st July 2025, cash account appeared as credit item, hence use the credit side to post the debit item, this salary account with the amount as 10,000 rupees. Explanation: in the entry dated 1st July 2025, capital account appeared as credit item, hence use the credit side to post the debit item, that is, cash account, and the amount is 50,000 rupees. Explanation: in the entry dated 10th July 2025, bank account appeared as debit item, hence use the debit side to post the credit item, that is, cash account, and the amount is 40,000 rupees. Explanation: in the entry dated 31st July 2025, salary account appeared as debit item, hence use the debit side to post the credit item, that is, cash account, and the amount is 10,000 rupees. This short lecture is brought to you by
Home of Accounts.
Please don't forget to subscribe.